So guys, thanks so much for sitting down with us. The investment opportunity in augmented reality and virtual reality is huge. DigiCapital sizes it at over $1 billion in the past 12 months. We had our biggest quarter year over year in terms of the dollars that are being invested in startups. We've had some big wins. Within just raised Series B, 40 million. We've had some falls. ALT-Space VR just closed, which is a social VR. So I thought maybe we just kind of go around the table and why don't you introduce yourself, your fund, and kind of where you're at with AR and VR. Are you looking at it? Are you investing? And if you've invested, who have you invested in? If you can talk about it. Or you can break news here. I'm always a big fan of that.
So I'm with the MaRS Investment Accelerator Fund, IAF. We're a $70 million seed stage investment fund. We are generalists. So we don't focus on software, hardware, VR or not. We're agnostic. We focus mostly on the timing. And so we're looking for companies that can be pre-revenue, but preferably in some cases have some traction and some proof of concept, and that tends to lead our decision making. We have yet to invest in VR or AR, but it is a space that I'm personally looking very hard at, and I see a lot of opportunities both within the ecosystem here and what's happening on the bigger scale for companies here to partner with and help scale.
Hi everyone, I'm Anna Serrano and I'm Managing Director of IDEABOOST, which is Canada's only digital media and entertainment accelerator run out of the Canadian Film Centre and in partnership with Chorus Entertainment. So we essentially have a number of different ways that we work with startups. First and foremost is the traditional sort of accelerator model where we provide seed investment mostly to early stage but also later stage startups. So early stage meaning pre-revenue, later stage meaning has a monthly recurring revenue of, I don't know, maybe $5,000 and or an annual strategic partner that's provided some revenue into the company. So that's the sort of the core accelerator model that we run, but we're also slightly different in that because we're with the Canadian Film Centre and we know talent and creators and we know how to make things, our IdeaBoost model is really based around what I call the virtuous cycle of innovation framework. So investments is just part of what we do. We also do co-productions where we sit in and we help produce content using those same technologies in those companies. We do sort of labs where we take talent in the creative sector and introduce them to the technologies and companies that we've invested in. And we're also doing industrial research, which is to look at cluster development in this space by really understanding what's happening with the startup space. And in particular, we just launched Pulse on VR with Omers Ventures in collaboration with Prashant. He and I are both co-principal investigators of this study, where we essentially look at what's going on in the AR and VR space in Canada and see like how many jobs are being created, et cetera. So we really like to affect the ecosystem as a whole, and our core focus, if you haven't figured it out already, is media and entertainment, and the technology strands that we have involve immersive media, so VR, AR, MR, XR, AI and machine learning, and ubiquitous computing, also known as wearables in some cases. So that's sort of where we play.
Hi everyone, my name is Prashant Mehta. I'm with Omers Ventures. Omers is a pension fund overall, but I'm part of the venture team. We invest in early and late stage technology startups in Canada and the US, just across different stages, across different verticals, software and hardware. AR, VR is one of the areas where we invest. We recently invested in a company called Felix and Paul Studios out of Montreal. I see Derek Luke and Graham from Interaxon at the back. It's one of our portfolio companies. Great working with them. And so yeah, from our perspective, I think it's one of the areas we're investing in. We're bullish on it, and we'll continue to deploy capital in this area going forward.
That's great. I wanted to start off first by asking you to maybe identify some of the hotspots and white spaces that you're looking at within AR, VR. So like what are some of the trends that you're currently having on your radar? Maybe start with Prashant. We'll work our way down.
Sure. So I think obviously I'll talk about those two sectors differently because the use cases are very different, of course. On the VR side, I think it was mentioned earlier, from a the maturity perspective, it's further along compared to AR, of course. A lot of the opportunities we have seen in Canada, and Anna can add to that, has been around Canadian companies in content and application part of the layer of the overall VR stack. We've seen some hardware companies, we've seen some enabling technologies that support the ecosystem, but vast majority of Canadian startups have been focusing on VR content and applications. On the AR side, there isn't as much activity, I would say, in the Canadian ecosystem, but that's one of the areas, and I think, Tom, you mentioned, it's one of the years for AR, and we'll see probably more innovation in the space in Canada and abroad. So, my expectation is going forward, AR will become more and more important, not just on the enterprise side, which is where most of the use cases are today, but also on the consumer side as we start to see more eyewear type products get into the market.
So to kind of unpack a little bit more about what Prashant was saying around the content and application side, what's interesting to us is that because of the history of CMF experimental stream funding that's gone on in this country, so this is public sector capital going into studios or companies that typically design content, okay? Because of all of that funding and because they've been pushing these content studios to essentially create technology infrastructure too, we have a very interesting kind of startup founder that's not very often seen in other jurisdictions. So this is this like hybrid content technologist expert that sits really nicely within the immersive media space, the VR, AR, MR space. So when you talk about people like Felix and Paul, yes, they make phenomenal content, but they're also making core infrastructure that supports the development of that content. And so, and we've seen the flip side of that, where you've got a company like Brinks, which is a company where we've invested in our accelerator, which has created a tool, sort of a 3D modeling collaborative tool that's kind of kicking Tilt Brush's butt and everything. But they're also as invested in actually making sure that the content that's being created out of that toolkit is as high quality as possible. And I think you don't get that same type of founder in other places where the sensitivity to content and the sensitivity to technology creation is of equal amounts. Okay. And so that's what makes this particular ecosystem in Canada really, really special, and that's why it's super exciting.
Well, I agree. The problem is with AR is that we just haven't seen enough yet. And that's where we as investors see the closest use cases where we see an opportunity to move to market, whereas VR is a little bit narrower, even though there are good opportunities there as well. But point being is that there's going to be multiple waves of development in both of these spaces, whether it's going to reside in software platforms on mobile devices, special mobile devices like Tango or whatever Apple may release in the future, and then dedicated smart glasses, tethered and untethered. And what's going to happen with end products as they mature through these cycles is a big unknown. And so from an investment perspective, it's really hard to know sort of what horses can be bet on because we haven't seen really what can be done with this technology yet. It hasn't proven itself out. So where there is a huge opportunity is to go for these enabling tools that help application developers create new solutions, create new products that you can grow with as the market matures. Quantum capture is a perfect example of that because what they've built here is a toolkit that essentially any AR, VR, or even conventional gaming application you want to create where you want to have a virtual human in there, they can roll with it. And so that sort of positioning where your tools, your development enables all of these myriad of products that are going to get developed, and some are going to have success, some are going to fail, but you're positioned so that you can roll with the punches and sort of ride the wave no matter which direction it takes. That's the really exciting opportunity that's out there, and we're starting to see more of that moving from the top layer application, moving more further down the stack. Because going down to the core platform and the hardware is just extremely capital intensive and a huge risk for a small company. That's why that's Microsoft's job to invest in that kind of stuff. So figuring out that middle layer where you can roll with it, that's where the money's at really.
So I want to talk a little bit about market timing, but I think a good segue right now is the fact that all the big players are now in play with AR, right? With AR and somewhat VR, but this year was a year for augmented reality because Facebook launched a developer platform, Apple launched a developer platform, Google already had one, and now the pressure's on to make it better. So when you talk about that middle layer, does the big guys coming into the space affect your strategy and how you pick these investments? And how does it influence that?
Oh yeah, absolutely. I think, if you look at where VR was 2 years ago, I think we're seeing a similar type of trend in AR where there's a lot of excitement with the products or larger companies getting into the space. The challenge often becomes it's really unknown as to what they're going to go after. So doing something like hardware is probably going to be very difficult as a startup, not just from a capital perspective, but essentially from a competition perspective. And also, I think it's great news that these companies are getting into it. It remains to be seen to what extent they actually continue to invest in it. So if you look at the way VR has evolved in the last few years, where the large manufacturers are still committed to the sector, which is positive, I think, even though the adoption has been slower than expected. But what's that done is companies or startups that are building applications or enabling technologies that will not only improve the form factor and the experience, but essentially help these manufacturers sell more products, will get funded. And they will get funded by these manufacturers. On the AR side, to your comment, yes, I think it's very exciting from both the enterprise and consumer side. But as these hardware products start to come into the market, we'll probably see a similar trend where AR will go through its cycle, and we'll see how the funding evolves around it.
The big question I have with AR, I don't know, am I allowed to ask questions as well as provide insights? And if anyone in the audience knows the answer, please let me know. The big question that I have is really with AR Kit was phenomenal, and the kinds of experiments that emerged are great, and we're certainly investing in applications being created in the space. One of them is going to be pitching later on this evening, large. So, but basically, the big issue that I have as a person who's looking for deal flow is what is that end kind of delivery system going to be for AR? Obviously, mobile is going to be big, but there are these kind of hints at some kind of headset. Maybe Helen, you have some ideas about how to answer this question since you've written a book about it. But what do you think is going to happen in terms of what that end delivery system will be?
I think the answer lies in the mobile journey itself.
Okay.
And so we did not have smartphones in the home right away. BlackBerry, if you recall, was a work device. And so I think we're seeing already this pattern emerge where these devices will be enterprise devices. Why? Because $3,000, if it saves X amount of time on an employee over the course of their 8-hour day, can easily be justified. And the devices are getting more rugged, and they have longer lasting battery. You know what I mean?
But here's the rub. So I'm going to age myself. So in 1994, I worked with Don Tapscott for his first consulting company, and we did this massive study where we got people to pay us $100,000 each for this research study that we were doing on the effects of networked interactive multimedia on the enterprise. And at that time, one of the case studies we did was Boeing, because all the engineers were using head-mounted displays to do the repairs. And so, this kind of enterprise model of rugged headsets is not. It's definitely not new.
No,
it's been around for such a long time.
Right. But the smartphone has changed.
Yes.
That's the big key difference.
Yeah.
It's we're building on layers now. It's just we keep thinking AR is brand new, but actually AR and VR is building on existing ecosystems, existing technology, and that also influences our investment decisions. It's coming out and trying to be Facebook of AR doesn't make any sense because the Facebook of AR is going to be Facebook with AR.
Yeah.
So it's not the same playing field anymore, and that's the thing with AR Kit. I've read a lot of really great articles about how we're going to see a boom in mobile AR. We are. It's coming.
Yeah.
And it's going to be tricky to invest in those companies because it's not there's no app store back in 2007. That was a great time to invest in apps because there was no other apps. Yeah. Now that app, it's a feature. It's a
Yeah.
feature in an ecosystem. There will be some that get it, that crack the nut, and those are the ones we have to find. But at the end of the day, we it's a very, very complex ecosystem. And I think it's the smartphone that allows, the smartphone and timing that allows for these devices to be ready to pilot in the enterprise, right? I don't think we should just, we're not going to all wear it in our office tomorrow. But we have like Meta that's working on, what's the MS Office of tomorrow? And you
Yeah.
have Boeing and DHL and ThyssenKrupp and Tesla.
Yeah.
They're all using these devices. And a great Canadian example of a company that's helping making this happen is from Calgary. It's Scope AR. They're working with Caterpillar. And they're making real money, and they're seeing these devices being rolled out past the pilot now.
Yeah.
Past the pilot.
Yeah. I guess, sorry, I just have to add another anecdote. I have to say that when I saw this Meta sort of live demo at AW in Santa Clara, and the guy reached out for the head, or for a sticky note inside his iPhone, and then shoved it in air onto through that was, to me, the moment. And to your point around mobile really driving a lot of these experiences.
But describe how big the thing was that he was wearing on his head.
That's true.
So I think we can't, the thing I think we have to understand is that augmented reality's opportunity is mobile for a while now. It really will be, because you're not used to it. Try this iJack stuff. This iJack stuff, it's kind of not in the same manner, but it was done in 2005, 2007, but you're ready for it because you're bored with your phone in your pocket. That's why you're ready for it. And so it's going to be a mobile AR heyday until we get used to it, and then these devices need to be miniaturized. Because guess what? Go outside and take a HoloLens in the sunlight and tell me what happens. Then you know that the future is not here yet. There's still a lot of room for growth, and that's a startup opportunity.
I was just going to agree, because when you look at the enterprise, I mean, GE, Siemens, whomever, they can afford to invest thousands of dollars per worker when they're going to go out and do their work, because cutting a couple of hours out of their workday, allowing them to do an extra job, they recoup that like that. You can just justify it. Consumers are not there, because the primary use for them is going to be entertainment, really, when it comes down to it. So what ARKit and mobile enables is that now, thanks to Facebook and Apple alone, then there are all the others, including Tencent, that are helping. But I mean, those two alone are going to provide 1 billion installs within, I think, 3 years. So I mean, now the game's open. People can start playing around with this and inventing, try all those, the version of AR apps that were the websites of the .com bubble, like the stupid ideas that just came and went, like buy a cat online.
Fart AR.
Yeah, exactly. Yeah. And so let people try it out, see what works, see what doesn't, and that's where we're finally going to see it's going to emerge what the real application is and where the real super app is. Yeah.
And that's so I want to ask, Anna, I want to ask that question. Does that change everything for you guys? I want to know. Because market is a big thing with startups. Now you have market, right? You were saying, AR, it's not there yet. It's there. Tomorrow, in September, it's going to be there. AR is going to be everywhere because of Apple, and then Google will make its move, and Facebook will be there. So, does the mobile AR strategy? Because we tend to always talk smart glasses. Does it change your viewpoint on AR? Does it change your investment strategy? Prashant.
Okay. So here's my perspective. I think it will come down to the use case and to what extent it's differentiated versus Apple doing it themselves, as an example. So if you're a startup looking to build a mobile AR application, which is not too gimmicky or a game, that's personal opinion, and it's something that Apple may not be able to make it within minutes or months or whatever the time period is, I think it's compelling. On the market side, yes, I think initial would be mobile AR, but I think the true leap, which is where I'll be most interested in investing, will be when we start to see eyewear. And yes, it's further down the road. I completely agree. I think overall, if you look at the way VR markets evolved, it will be challenging, even though we start to see AR headsets. But I think longer term there will be one headset. That's my opinion, and hopefully it'll do both AR and VR. And I think that's where we get into an ecosystem of applications that we've never seen before.
I think it's like, it's great that mobile AR is a real market. terrible that mobile AR is a real market,
Okay.
because it all becomes about differentiation, right? And so, and it's not just use case and the actual sort of point of the application that you're making, but it's also around the brand differentiation of that use case or application. And this is where I think, not to sound self-serving, IdeaBoost really kind of tries to double down on, which is by actually attaching these new early stage technology applications to creators, influencers, talent, branded names, etc., then that can actually present the differentiated positioning that you need your particular startup application to have. Because it's going to be a bloodbath out there with so many of these applications going out, coming out, and you really, really need a way to stand out from the crowd. And one of the ways to do that, unfortunately, fortunately, is some kind of association with a known quantity or entity.
Yeah, no, totally. It's very easy for anyone watching the marketing materials that Microsoft puts out about like the future of HoloLens and all this stuff, and imagine a world where your TV's on that wall, but it's not really there, and it can just follow you around the house, or your calendar or whatever in your office, that your office becomes your work desk instead of your screen. But the thing is, it's going to be a little bit before every office worker or whatever is wearing smart eyewear. And so if you're today a developer and you're looking to get into VR, AR, and you're able to develop a product that works, it's not what you ideally think of in the future, but it works on mobile and it has real value and it creates value for the user, and you just have this roadmap of how having dedicated hardware will just take it and just put it on steroids. That's where the real value is, because thinking of it in terms of mobile and post-mobile is going to stop a lot of innovation from happening. It has to be on a continuum that can roll with it.
Well, and it's interesting, I was joking with someone about the AR Monocle, but we created the AR Monocle. It's your iPhone.
Yeah.
And it's following that same pattern as well. So we'll have these little monocles in our pocket that we put up to our face and then put down, and then out of convenience, and because we just, our arms are tired, we're going to crave these glasses. Again, that's the market demand. On the enterprise side, you don't care what you look like. You're given a tool. You're given an ugly black phone, that you have to answer. So you're going to be assigned a device. But when the consumers need to crave this device, and that's when someone's going to come out with it.
Are we past glass holes, like that whole thing? Like, are we to the point where, and you might know this better, but are we at that point?
Is that why?
No,
I think that's what you meant.
I would never suggest that. But are we at that point today that if this product was available, it was worth price? No.
We're not there yet.
I will add, though, to your comment, Tom, around the market. I think timing the market is not a strategy, but with a rising tide, a lot of companies will get funded. So
of course.
If we start to see that initial traction you're talking about, and we start to see that wave rising, that's amazing. I mean, that would mean a lot of companies in the AR sector will rise with it. Now, how many are going to survive? We'll see.
Right.
But what I've noticed in over the last few years investing in different types of companies is, if you are in a market that's growing super fast, you're in a really good position. And yes, things will drop off and some companies will die, and the ones that will survive will be the differentiated, unique ones, with solid teams. But it's a great time to be in this market.
So a last question before we move on to some AR kit demos, which is going to be great. As I mentioned before, we're layering these technologies. So you can't look at AR and VR as a microcosm. And one of the great things, being from San Francisco, seeing a flurry of activity of AI out of Montreal and Toronto, and it becoming a center of that world. I'm really proud. So what are some of the other technologies that you are investing in or eyeing in that you feel are necessary to really make this immersive computing happen? The whole package. What are some of the other technologies that you're looking at?
So I think if you've mentioned a few already, AR, VR, of course. I think artificial intelligence, similar to AR, VR, touches almost every single sector, right? So, from my perspective, the attractive opportunities may be in the horizontal type of opportunity where you're working on a unique product on a specific technology that cuts across different verticals. Another one is blockchain. And we've been investing in that sector. We'll continue to do so. I think it's a core game-changing technology, but it's still very nascent, similar to where AR, VR, and AI may be. I think all those technologies impact all different types of sectors. You can look at AI in media entertainment, you can look at AI in financial services. I've looked at genomics companies. It almost applies to every single thing.
I have a different take on this question, which is, yes, obviously everything that Prashant says we're also doing, but sort of a small little thing that we're also interested in that's maybe not necessarily about pure investment only, has to do with really keeping an eye on sort of the meta changes across the entire sort of socio-political landscape. And it has to do with things around privacy, around security, around infrastructure build, and how the public and the private realms kind of work with each other. So, and then how that influences the types of maybe future startups, future companies emerging. So, for example, the thing that I'm actually interested in are things like platform cooperatives. So this is where it might be a public based type of infrastructure that you're building for AR, but multiple public sector agencies co-own that particular piece of infrastructure so that they can define things like privacy issues or security issues associated with that piece of infrastructure. So that's something that maybe not a lot of investors in Silicon Valley are interested in, but coming from a place like Canada, where there is this mix of public and private capital, I think there's going to be a lot of interest in defining new types of infrastructure like that.
Well, I agree that those 3, 4, depending on how you split it, areas, AR, VR, AI, blockchain, and in the future, quantum, are sort of the big opportunities that lie ahead to actually redefine the way that things work. The challenge is that it's very easy for someone to get really excited about AI and start learning how to code and start building applications and start building them for their own sake. Where the real value is that if you figure out a strategy where you see an opportunity to apply a piece of deep learning to solve a problem, and in the way that you solve it, you're actually learning skills that can be applicable to a broader set. Like ModiFace is a perfect example because they're starting with one type of application, but they're learning a whole lot of stuff about face tracking and understanding just how people react and where they're looking and what that means. And that can be applied to so much more. I mean, you can apply that to, first of all retail, and then taking it further to things like therapy and surveys. Like, you can take it anywhere. And so doing that within AI, and if you're targeting financial institutions as your customers, learning about how they work, like, and understanding how these businesses work, taking that and then applying it to other businesses and help them cut down on their expenses or whatever it is, you got to just keep focusing on developing your core capabilities and your core technology and seeing how that can be further leveraged as you go down the line, and be good enough and focused enough that you differentiate yourself, but still position yourself in such a way that that can then be pivoted into a broader growth and move beyond your initial market. And you can do that in any of those spaces, but you have to keep your eye both on the tech and the opportunity in the market that you're going after.
Great. Okay, well, round of applause for all these guys up here. Anna, Prashant, Alexander.